All right, everyone. So, good morning and thank you for being here, I guess. So, I'm Sanjana and I'll be kind of doing your revision for manufacturing accounts today, right? So, at any point, if you have any questions, always feel free to use the chat box. I promise you, no one is going to judge you or, I don't know, think anything. So, if you're shy or nervous, don't be. So, we'll start right off. So, we're going to look at manufacturing accounts, as you all know. So we'll quickly go through the entire chapter. I've kind of gone through your past papers as well. And we can do a question. So if you have like a specific question that you think is difficult, you can let me know. Or you can just, we can go through the one that I've prepared for you. So when you talk about manufacturing accounts, first we have to look at why, right? Why are we preparing this entire new statement? You mainly have two financial statements. Obviously you have more, but you have these two main ones. Why are we preparing this extra one? So can someone tell me why? Actually, not, telling why is easy. Manufacturing account is, to find the manufacturing cost in a manufacturing business. Then the question is, what kind of business have you been doing all this time? So remember in like even O-level accounting, you kind of learn the, sales minus cost of sale, and cost of sale is opening inventory plus purchase minus closing inventory. What kind of business is that? Because now when you talk about manufacturing, you're looking at opening inventory plus production cost or manufacturing cost and then minus closing inventory, right? So if you have manufacturing businesses and we are preparing a manufacturing account for that, can anyone kind of guess and tell me what kind of business have you been doing before? Any guesses? If you can use it, you can use the chat box is fine, or you can unmute your mic. No? Any guesses? Have you never thought of it? What kind of business have you been doing before? Now, if you are learning manufacturing now or at this point, all right. So you have all this time, now, as in before you learn manufacturing accounts, you've only been looking at sort of retail businesses, right? That's the kind of businesses you've been looking at before. So you all this time you're looking at retail businesses where you are simply buying the completed goods and you're selling it at a higher price. So there it's not very difficult, right? You just buy the same thing and you add a small percentage of gross profit and you sell it. That's all. Like let's say for example a bookshop, they buy books and pencils and pens and stationery from Atlas or whoever, and they sell it, right? That's all they do. They buy and sell. They just do trading. But then think of like a carpentry shop or something. They don't do that. They buy raw material, they have a production process, and then they sell the completed tables, chairs, furniture, whatever at the end, right? So, which is why now you have a different type of business. So, you definitely need to prepare a manufacturing account so that basically you can calculate the cost of sale and meet your accounting requirements. But theoretically speaking, there are a few purposes of preparing a manufacturing account itself, right? First of all, obviously, you need to look at the cost of production, and you need to know this cost because so that you can control it, right? If you don't maintain accounts, you have no idea if you're actually making a profit or not, or sometimes if you are spending too much or not, right? If you don't maintain accounts, you might sell your goods and get like, let's say 1 million in revenue. And you might think, okay, 1 million is a lot, but what if you spend 1.1 million spending it? Because when you get money, you feel like you have it, but you need accounting to look at the cost and to see the efficiency of your business. And also to ascertain the price of the products. Obviously, you don't want to sell it at a lower price than what you spend. If you're spending $10 on something, or let's say 100 rupees, you want to earn something above that, right? So for you to fix the price, then obviously you need to know the cost. And also, um, to kind of classify the production cost in a methodical system. Now, what you can do is you can take all your costs. You have that format, right? You'll learn that format, raw material consumed and direct wages, your production overhead, your prime cost. The thing is, honestly, if you just want to calculate the cost, you don't need that format. I can just take all the costs and I can put it in a list and I can take the total. It will still be correct. Like, except for that opening work in progress and the opening and closing inventory. If I just take all my expenses, right, all the costs without any classification, I'm not looking at direct or indirect or anything. If I just take a list and I add it, it will still be correct. My final answer will be the same. But that's not the purpose, right? So we want to, in a methodical manner, we want to categorize it. So we want to also make some sort of analysis. The main purpose of accounting is to provide information to decision makers, right? To stakeholders. So that information has to be complete and comprehensive, and you want to give as much information as possible, right? So we are not just going to take a list and add it. The answer will be correct, but you can't do that. You have to kind of give whoever is looking at it a proper idea. So this is the prime cost. This is the overhead, right? This is what we can control. This is what we can't control, and all of that, right? So then this is how we classify it. So in a production company, obviously you don't have purchasers. So normally in cost of sales, you have in a normal retail company, you have this purchasers part because that's what you're doing. You're buying and you're selling, and whatever remaining at the end of the year, you minus and you get the cost of sale. But here there is no purchasers. In previous, like when we were doing A levels back then, there we also learned that I think you all also must have learned there are situations where you can have a manufacturing company who is also purchasing, right? Like they manufacture plus if they don't have time or the capacity, they'll buy also and sell. Like they do both. But in your papers that I've looked so far, you only have manufacturing, right? So obviously there is no purchasers. You are only looking at the manufacturing cost. You're not buying finished goods. You're making them, right? So your equation is a little bit different. So if you look at your manufacturing cost itself, you're going to look at mainly two parts, right? So prime cost and your production overheads. Again, this is going back to that fourth purpose of accounting. We want to methodically classify now, even without categorizing, it's a summation, right? Doesn't matter if I add this and this, so I add all the costs together, I'll get the same answer. But you want to properly analyze it. So your prime cost is going to show all your direct costs, like your direct material, direct labor, and direct other expenses. And your production overhead is going to show all your indirect costs, which is anything that cannot be directly attributed. So here, your purpose of doing this again is to see what you can control and can't control, right? Again, you're trying to, now for example, let's say your cost is too much. You can make a decision and see, okay, where are we spending a lot of money on? You can make those decisions because you classify them like this. Because sometimes maybe you're spending, again, let's take an example of a carpentry shop. Maybe sometimes you're spending very little bit on like the raw material, like the wood and the nails and everything. Maybe you're spending a lot of money on the rent for the factory, right? So then you can make that distinction by looking at prime cost and overhead. So if you see prime cost is small, but production overhead is big, then you have to realize, okay, we're paying too much for rent and electricity. It's better to move to another smaller garage or maybe something not close to the city, something that's cheaper. So then you kind of make decisions at this point as well. And when you say direct, so if you're classifying and if you have any like problem figuring out, okay, is this a direct expense or is it an overhead? Direct means it directly contributes to the production process. And it also means that it's directly attributable per production unit. So this is a good example is for wages because sometimes they give you very vague answers, right? Like supervisor salary or manager salary, operator salary. And you might be thinking, okay, is this person going to be under direct labor or is it going to be under overhead? So if you take someone like a supervisor, right, or a manager, they are going to be indirect, right? Because they are not directly contributing to the production process. They are not working to manufacture anything. No, they're just looking from up to see, okay, is everyone doing it? Is everyone working? Right? How is the accounts? They kind of look at an overall kind of view. So even accountants, if you become an accountant, it's not directly contributing to the production process. Without an accountant also, it will still function. Without a supervisor also, you can do work for a while, right? Obviously, it won't be as efficient, but they are not directly contributing. But if you talk about, let's say, an operator or carpenter, right? You need a carpenter if you want to make a table, right? They are directly contributing to the product. So anything if you get like security guard, cleaner, those labor costs, they are all overheads, right? They are not directly contributing to the production process. And also it has to be directly attributable. So this I put because sometimes I had one student ask me if electricity directly attributes, right? You can't produce some products without electricity. So, but electricity is not a direct expense. No, you don't put it on a prime cost. That would be under factory overheads. And that is because it cannot be directly attributable per production unit. You can't tell to make a table, I need 1.3 kilowatts of electricity. It doesn't work like that, right? You use electricity in general, and then you kind of take that overall cost as an overhead. Even rent, you need to pay rent to have a factory and make the good, and it's very important. But you can't say, I'm spending 300 rupees on rent to make one chair. It cannot be directly attributable per production unit. So that's what you mean when you say direct cost and indirect cost. And also, you all have come across that those shared expenses. So they say 50% for office or 50% for factory, one third here, one third there. Or sometimes they might give you a ratio 2:3 shared between office and factory. So this is because the income statement, there's two parts, right? You have that trading account part, and then you have the profit and loss part. So the trading account part is about trading, and the profit and loss part under, normally you say other income, and then after that you put expenses. So those regular expenses, they are all administrative expenses, right? Administrative in the sense they are not regarding trading or they're not regarding manufacturing. They're sort of other services, supporting services to the main business. Your main business might be a carpentry shop, but to run that carpentry shop, you need administrative expenses as well, right? You need an accountant, you need maybe like a secretary, you need cleaning, you need an office to do work. Even if that office is a small room, you still need one, right? And even if you take like a bigger, like let's say Sarasavi or something, even though their business is buying and selling books, they still need administration, right? They need a cashier, they need a manager, they need a security guards, right, for their office, and they need security guards for the shop. Those all. So then you have to classify. So anything to do with the office, right? Those are administrative expenses. Therefore, they have to come under the income statement. So in your past papers, normally I think I've seen where they give you rent and electricity. And rent and electricity is, they say, okay, it has to be shared or apportioned or allocated this much for office, this much for factory. So when they say for office, that office part has to go in the under expenses in the income statement. That's because even practically think you don't have to have a separate office and a separate factory, right? Sometimes you might rent one building and the building has 3 floors. In that 2 floors are factory, the final last floor they use it as the office. So then you pay rent for the building as a whole, right? You don't pay rent for 2 floors and a third floor. You're renting the entire building. Sorry, I'm a little bit sick. Right. So then when you pay rent for the entire building, but 2/3 of it is for the factory and 1/3 is for the office. So then even though the expense comes as one unit, you have to separate and put it in the relevant place. So anything to do with office goes under the income statement, and anything to do with production, which is factory related, has to go under the manufacturing account. Again, you might ask, okay, why am I dividing and putting? I can just add the whole thing and the final answer will still be correct. That's true, right? The final answer will be correct. But again, here you're trying to methodically categorize, right? You want to observe and say, okay, how much money am I spending for the factory? Is it too much? How much money am I spending for the office? Do I have to keep one entire floor for the office? Maybe I can go to the next building and take a small room or something. You can make decisions like that, right? So even things like electricity, same situation. So whenever they say this is for the factory, it means manufacturing account. If they say this is for administration or this is for office, that is in the income statement. Especially when you're like calculating depreciation, right? Sometimes they say building depreciation and they mention at the top description, okay, 2/3 of the building is used for the factory, 1/3 is used for the office. You use that information for the electricity and rent, but for depreciation, you just take the entire building depreciation and put in one place. That would be wrong. And even I think in your past papers, machinery depreciation always goes to the manufacturing account, and furniture depreciation always goes to office, right? So there also I feel like it could cause some sort of confusion. So if they say furniture is used for the office, then furniture depreciation would be an income statement. And if they say machines are used for production, then machinery depreciation would fall under here. But it's okay. Just remember, okay, is it going to the office or is it going to the factory? If it's office, income statement. If it is factory related or production related, it would be in the manufacturing account. Okay. And theoretically, I mean, aside from the question that we will try, that's all there is to really revise. Any questions so far? This is all the theory part, except for the sum, I believe, in your lesson. Is there anything else I missed or anything, any question I can answer? Yeah. All right. Okay. So then I do have a past paper question that I looked at that we can try. Shall we do that? Or you can let me know like a particular paper which is difficult, or maybe you would like to go through it, or you not even a paper, any question, you can drop it on the Zoom chat box. Okay, all right. So what I'll do is I'll give you the paper that I have here. I asked someone from your batch for a comprehensive question. I don't know if you have tried this question, by the way. I feel like it's from a past paper. Can I see it on the chat? I think I've given you it. So it's a 30-mark question, I thought, and it had, a lot of sort of factors to consider. I thought maybe we could try that. Okay, so let me just take this paper here. Hold on. I'm just getting this onto this Excel sheet. So let's just quickly go through this question. So you have your regular, the following list as balances extracted from Furzev Limited, and you have your normal sort of list, and then you have additional information as well. And you are required to prepare the manufacturing account, calculate cost of production of printing machine, which is the same, okay, right? Ascertain the value of the finished stock at the end of the year, and prepare the income statement for the year ended 31st of March 2022. So then this wouldn't finish here, right? Let me complete this other income. And also, and then you have expenses, right? All right. So first of all, I think I would suggest, I don't know if how you all do it, but when I was doing A levels, I remembered it was easier to draw the format first and then do the adjustments and then fill in the rest. I think you guys also probably do the same thing. So always you drop the format first, because then only you can do the adjustments, and you have to do the adjustments before filling everything else, because if otherwise you have to cut and write on top of that, which is very ugly. And also you can't use tipex in your A levels, so difficult also. So you must know that you always get marks for writing the business name and the account name properly. So this would be Service Service Limited. right? You're preparing the manufacturing account for the year ended 31st March 2022. And even in this, you are going to use Purvis Limited statement for the year ended 31st March 2022. And then you're going to look at the workings or additional information, the adjustments that you have to make. So here it says selling price per printing machine was 150,000 and there was no change in the selling price during the financial year. But here they have given you sales already. So we are a little bit unsure of what they're talking about, right? They've already given you sales as 15 million. So you don't have to calculate the sales. So that means you must have to calculate the production unit. So we'll write that here and just leave it. Selling price per unit is 150,000. There was no change in the selling price during the financial year. Okay. So we'll just leave that here and I'll color it so that I don't forget. Because it's suspicious when they give you information and there's nothing to do yet, right? So we'll keep that there. And we'll move on to the second one. The breakup of the salaries and wages account is given below. So there is a salaries and wages account, right? So it's 2,000, or actually 2 million, right? So I'll leave that here. Salaries and wages. So the full amount here is given, salaries and wages, 2 million. Let's just say 2,000. Oh, by the way, one more thing. If you are doing it in thousands, which is, I think, easier for you, please remember to write. Not your entire answer is wrong, mathematic, as in technically. So you can see that the breakup is given here. Salaries and wages, you know the full amount is 2,000. Out of that, they're saying that, okay, direct production wages. I'm going to say direct is 1,200 or 1,200,000. Indirect production wages is 200,000 and administration salaries is 600. Okay, that's correct, right? So sometimes it kind of give you weird numbers and you have to see if it matches or not, right? Okay. So yes, it's true, right? The entire account is there. There's nothing missing. So now all you have to do is again categorically write them down in the correct places. So you know direct production is a prime cost, right? It's directly related there. So here you're just going to write down direct production wages under direct labor. That would be 1,200. So once again, here also, when you're writing down the format, so you know this part is fixed, right? This part is always the same. Leave 2 lines maybe for direct labor, 1 line for direct expense. Prime cost, production overhead, and you can leave the rest blank because it might be difficult for you to estimate how much space you need. Or you can write production cost in the last line of the page and keep these two there. But either way, make sure to write everything down and so that you don't forget. So even in the income statement, you know, up to this point, everything is quite fixed. You know, sales minus sales return, and then you have cost of sales. So that equation is also always the same. And then you have other income. You can maybe leave one line. If it's not there, you can just put a blank. And expenses, and then leave the rest of the rest of the page blank after that. Okay, so even here you can look at the equation, right? So production cost, I've marked in green. Production cost is prime cost plus production overhead. So production overhead, you don't have to categorize. You can just write it down. And then you can see prime cost is then cost of raw material, direct labor, and direct expenses. So here we have recorded direct production wages, 1,200. Indirect production wages here. Because that is a overhead, right? It's indirect. It's there in the equation, or sort of in the name itself, right? Indirect. Therefore, it is not a prime cost. It is here 200,000. And administrative salary. So remember, anything to do with administration is to do with the office, and that goes in the income statements. Under expenses, you would write administrative salaries 600,000. Then that is the second adjustment done as well. Then it says 50% of electricity and building rent is applicable for manufacturing activities. So here it's easy because 50% is 50-50, right? Just half. But in case there are like more obviously awkward sort of divisions, you can just draw a small table. It's much easier. So then you know this is for the office, this is for the factory. Office 50%, and factory also 50%. The 100% amount can be given here. So they're talking about what? Electricity and rent. So electricity, the full amount you can see is given here as 500, and rent, the full amount is 800. So 50% of that to do with the office would be then 250, and here also 250. And here it's 400, and here it's 400. So just as doing the sum is important, it's also a very good practice to show your workings properly so that your examiner knows where you've gone wrong. If you go wrong, obviously you're not using an Excel sheet, you have to use, you can't use calculators, right? Or can you? So it's always good to, anyway, to have a clear working so that even you know what's happening and your examiner who's marking also knows what's happening. So they might, look at you and think, okay, this child is very neat. And even if you make a mistake, then they can always refer and see, right, where you went wrong. So you can actually gain more marks. There's no loss in maintaining proper workings. So here you have broken it down appropriately. So anything to do with the office is in the income statement. And so this is office electricity, but I'm just going to say electricity, 250. And at the same time, electricity is also an overhead. So here also I'm going to say electricity. Or you can say factory electricity, right? That's also 250. And at the same time, rent also you can allocate. So building rent, office rent is 400. And at the same time here also the factory rent is 400. So then you have properly sort of allocated the shared expenses. I don't know if you all are writing this down. I forgot to ask you. It's okay. I'll send this to you, but I'm sure you have the answers anyway. Okay, right. And then you have, right, all machineries are used in the factory and all furniture is used only for office activities. So machinery is for factory manufacturing account, furniture is for office income statement. So now the only cost or only expense we have normally with machinery and furniture is depreciation, right? So you can casually check if there is, now for example, like machinery maintenance, right? Because then that would also be for manufacturing account. Or if there's furniture repair or something like that, you have to be careful there as well. So here, there is no extra costs or expenses for machinery and furniture except for depreciation. So then machinery depreciation is 350, that is production overhead. 350. And at the same time, you also have furniture depreciation, 260. So furniture depreciation also is just another expense, but under income statement, right? Furniture depreciation, 260. So as you're doing the sum, always make sure to tick off the values that you have already used, just so that you don't kind of repeat that again. So even when you're done with the sort of adjustments, when you're done, just tick it off so that you know it's done. Right. The company has 20 completed printing machines as at 31st of March 2022. So this is the closing inventory. And they have not given you the cost of closing inventory, right? So that has something to do with this. Closing inventory is 20 units. That also I will write it down and leave it there in case. Because they clearly want us to do something with this extra information. We just don't exactly know what yet. So we leave that there. So that is all the additional information. Then we can move on to just filling the rest of the information in. Whatever is given here that we didn't use, you can now write it down. So opening inventory is 800. Opening work in progress. Always opening balances or opening inventories, doesn't matter if it's raw material or work in progress or finished goods, you always plus, and closing you always minus. Here it's 400. Finished goods, 10 machines is 700. Purchase of raw material, 8,000. Raw material return. So remember, if you're minusing something, please make sure to write that within brackets. If not, you will forget to minus it. You'll just add everything and go. And then you have carriage inwards. So I'm assuming that is for raw material. Yes. 300. Salaries and wages. Remember, we already kind of broke it down and recorded that. Carriage outwards. Remember, carriage outwards is a regular expense. So carriage inwards is the expense that you pay to bring the to transport the goods inside the company, right? That's why it's carriage inwards. And carriage outwards is basically delivery charges to deliver it to your customers. And the difference is that when you say cost of sale, that is all the costs that you have incurred to bring the inventory to the present location and condition, right? That's the technical definition, right? So carriage inwards is necessary to bring the inventory to the current location. If you don't pay carriage inwards, it will still be in the supplier's warehouse. It won't be with you. But carriage outwards is after it's already in the present location and condition and you've done some work and you're delivering it outside. So this is not a cost of sale because this is more like optional, right? Customers can come and get it from you as well. But carriage inwards is necessary. You have to pay someone to transport it to your business. The carriage inwards is a cost of sale. Carriage outwards, a regular expense. Obviously, it is not manufacturing expense. This is a kind of a sales and administrative side, right? So under income statement expenses, we will say carriage outwards. And you can see that it is 150. Let me and then you have sales, okay, sales 15,000. And then you have electricity, which we apportion, building rent also we apportion, indirect material. So when it says material, it's a manufacturing cost. So it has to be in the manufacturing account, but it's not direct, it's indirect. So we write that under overheads. Indirect materials. 700. Machinery depreciation we already wrote down, and furniture depreciation also we wrote down. Stock. So raw material closing inventory. So remember again, you're minusing all the closing inventories, 600. Work in progress, 800. And finished good inventory is not given. I believe that was one of those requirements, right here. Ascertain the value of finished good stock at the end of the year. So this we have to calculate. So now that we have kind of transferred everything else, we can finish off this working, right? Because even the income statement is okay. After expenses, what do? You get the total and then you get net profit, right? Net profit for the year. All right. So the only thing missing, so we can, if you leave a, for example, if you leave two lines and then you have a blank, you know you can always put a dash, right? But because I cannot do that, I'll just leave it this. Direct expense also here, there's nothing. So direct expenses, you can only really have royalty payments. That's the most common one, right? Royalty payment in the sense the payment you make for copyrights. Like, for example, so like you remember those scientists who made the Pfizer vaccine or the COVID vaccine? So obviously the scientists are not going to open a factory and make the vaccines, right? They sell it to a company like Pfizer or Sinopharm and they make the vaccine. So Pfizer didn't, and actually Pfizer created one, no? So these manufacturing medical companies take the formula from the scientists and they produce it and sell it. So obviously the scientist who made it also gets paid, right? So per vaccine that these companies produce, the scientist maybe gets like $1, $2, right? It depends. So that $1, $2 that they get paid for because someone else is using their creation, that is a royalty expense, right? That's called royalty payment and that falls under direct expenses. So if you see the word royalty payment, that is a direct expense. And anything else? No, here also nothing much. Actually, no, we needed that. Sales return is not there, so you can write 0. Production cost, we have to find out to transfer. Other income is not available, so you can say 0. Right. So to complete all of this, we only need the closing inventory. So we can start with that. Now here they have given us the selling price per unit, and we also have the closing inventory. We also have the opening finished good inventory, right? Then we can find out the production, right? They're asking us to ascertain the value of the finished goods at the end of the year. So what do we really want? We want a finished good cost per unit, right? This is what we want. We want the cost per unit of the finished good. So this is easy because you know this is the total production cost divided by the number of units produced. And then they're asking us to find out the closing finished good cost. So you know the finished good cost is the cost per finished good multiplied by the number of closing inventory. Inventory. Let me zoom this in, otherwise it's quite difficult for you to see, I think. Yeah. So you can very easily first figure out what you want. What exactly do you want? If you're ever confused in a situation, see, so they are asking you to ascertain the value of the finished stock at the end of the year. So that means they want the closing finished good cost, right? That's what they want. And you can very easily find out an equation as well to figure out the answer. You know, the closing finished good cost is the cost per finished good into number of finished goods, right? At the end of the year. That's it, right? If you want to find out the closing finished good cost, you want to take the cost of one unit multiplied by the number of units. So here they've actually given you the number of units already. So what you really need is some mystery answer here multiplied by 20 because you already know there are 20 units. So to find out the cost per finished good, then you have to use this equation, which is very easy. If you want to know the cost per unit, you take the total cost divided by the number of units you produced. Then you get the cost per unit, right? If you want cost of one unit, you take total cost divided by the number of units produced. So production cost you can find out actually here. And then you need to divide it by the number of units that you have produced. So here you have to think a little. Selling price per unit. If you have selling price per unit, okay, even this you can solve it using an equation. Let's not do it too directly. Okay. Now here also, now you have this equation, and then what you do? You need production cost, which you can find out. This is possible, right? And divide that by the number of units produced. So you need to find out number of units produced. So how do we do that? You can take an equation easily, no? Let's take the cost of sale equation. Cost of sale is equal to opening plus the production minus the closing, right? Sold. I'm just taking the normal cost of sale equation and not using it for cost. I'm using it for units. So cost of sale is the opening inventory plus the production cost minus the closing inventory, except I'm not doing it cost wise. I'm doing it unit wise. So the number of units sold is going to be equal to the opening number of units plus the production minus the closing. And this is given. Wait, hold on. Yes, finished goods opening is 10. That means, so we know the opening, that's 10. We know the closing, that's 20 they've given us. We need to find out this, right? We need to know how many units were produced. Therefore, to find out this, we only need this number of units sold, which is also quite easy to find because they're telling us the selling price per unit. So let's just hold on. I'm a bit neurotic about the editing, as you can see. So to find out the number of goods sold, number of units, let's say, is also again easy. If you want to find out how many you sold, you take the total sales divided by the selling price per unit, right? If you want to find out exactly how many machines you sold, printing machines, right? How many printing machines you sold, you take the how much money you got from selling and divide it by how much you got for one unit, right? If you want to find out how many you sold in total, you take the total sale, how much money you got from everything, and divide it by how much you charged for one machine. Yes, I think that's quite direct, right? We all are A-level students. I keep thinking like small children. Okay. The total sales here you can see is 15,000, right? So that's 15 million actually. divided by selling price per unit, you can see is 150,000. That means you would get an answer of what, 100 units, right? So let's recap again a little bit because it was a lot of things happening. They are asking you to get the value of the finished stock at the end of the year. So what do you want? You want the closing finished good cost, right? The cost of the finished goods that you have. That means you basically want to take the cost of one and multiply it by the number of units you have. So you know the number of units you have, it's 20, they've given you. You need to find out this amount. What is the cost of one finished good? So to find that out, we're looking at this. So we know the cost of one finished good is the total production cost divided by the number of units produced, right? You're going to take the total to find out the cost of one unit. You take the total cost and divide it by the number of units that you have produced. So production cost you can find out. You just have to, calculate this. You need to find out this number of units produced, right? How many exactly did you produce? Find this out, we're using this equation. So we know the cost of sale is equal to opening inventory plus production minus closing inventory. We know that. Except we're not looking at cost, change cost to units. The cost of units sold is equal to the opening units plus the production units minus the closing units. So opening units, you actually know it says 10. So it's given in the sum, right? I don't want to scroll up, it'll mess everything up. So 10 plus, this is the one we want to find out, minus closing is also given 20. So to find this out, we need this one, this value. So to find this value, we're using this, which is easy. If you want to know the number of units sold, you're basically going to take the total sales and divide it by the selling price per unit, right? If you want to know exactly how many units you ended up selling, you take the sales divided by the selling price. You know how many units you sold. Now you have actually figured it out. You have 100. So now all the answers are going to fill in. But in the meantime, I feel like if you want to write this down, I'll give you a minute. And also, if you have any questions, do let me know. If you want me to explain it again, also let me know. I don't want to mention any names because I feel like if I pick on you one by one, you will all leave. So it's okay. Just if you have any questions, let me know. I've sent this part on the group, this group chat, right? So now we have one answer and we can start. So we know there were 100 units sold. So I can substitute here 100 is equal to the opening amount, which is given as 10, plus the production amount, I'll just keep it as P, minus the closing amount, which was given as 20. So if I rearrange this equation, P is equal to 100 minus 10 plus 20, which is equal to what? 90 plus 20, 110. Yeah, right? Just double checking. I don't want it to be wrong. Okay. So now we know they have produced 110 units, right? Which makes sense. So they had 10 from the opening, right? And they produced another 110. You can double check like this. So this is the production amount, which means totally we are looking at 120 goods. Out of this, they have sold 100, right? They sold 100. They had the opening. Again, they produced and got some more. Now this is how much they have. Out of that, they sold 100, which means 100 left the company. That means 20 should be remaining, which makes sense, right? The closing inventory is 20 units. That's 20 remaining, which means that this amount is correct. Okay, so now we know this. Okay, but to do this, we have to get the production costs. I will quickly go here. I would ask you to do the sum, but I feel like no one's going to tell me an answer. Shall we try though? I'll give you a few minutes. Can someone tell me what is the cost of raw material consumed? You can just let me know on the chat box. I'm sure you have a calculator, even you can use the phone calculator. What is the cost of raw material consumed? Right, let's see. Yes, so Shafika, that is correct, right? It is 8,300, right? By the way, only if you get it right, I will say your name. If you get it wrong, I will not mention. So yes, Afra is also right. Okay, I didn't know you could direct message me. I would have asked you a question long time ago. Okay. So yes, that is the cost of direct material consumed. Here, cost of direct labor then is 1,200. There is no direct expense. Can someone tell me then what is the prime cost or total direct expenses? Right. So Afroz and Shafika, that is correct, right? So your prime cost is just a summation of cost of raw material consumed, direct labor, and direct expense. You would get 9,500. And then your production overhead, and Fatima as well. Yes, that is right. Right. Exactly. So now you have 1,900. I will write this 1,900 here. We'll do it step by step. If not, it's confusing. Right. So everyone's given the correct answer, 1,900. What is then prime cost and production overhead? What is your cost? Right. You get 11,400. Then what is your production cost? So then you're going to take this time cost plus production overhead plus the opening work in progress minus the closing work in progress. You get 11,000. Shafika and Fatima, that is right. So now you directly know, right? 11,000. And immediately what you do after you get this 11,000 is transfer it here, 11,000. Now you know that is a production cost. And we can also substitute it here. So we know that this is 11,000. So for everything to produce all 110, we used 11,000 divided by 110. Your final answer is going to be 100, right? Per unit. 100 rupees per unit. Actually, not 100 rupees, 100,000, right? 100,000 per unit. Very risky business. This is, yeah, it's actually 11 million. Right? It is 100,000 rupees per unit. And that's how much they're spending per unit. So if it is 100,000 per unit, and there are 20 units, your total cost is 2 million, right? The cost of finished goods is going to be 2 million. It's a little bit of a stretch, but you can get the answer, right? So always stick to just very simple equations, and it's all things you know. So first you get exactly, okay, what do they want? To get this, what do I need? Again, to get this, what do I need? To get this, what do I need? And at one point you will get the answer. It's a just kind of go step by step. So now you know that so closing finished good is 2 million, but remember you have to write 2,000 here, right? You're writing it in thousands. And also you have to write that within brackets because you are going to minus it. You can see that this color goes here. Now that we have that, we can complete this as well. So net revenue, sales minus sales return is nothing much to do there. Okay, 15,000. Can someone tell me what is the cost of sale here? So Shafika and Afroz, right? I was hoping you all were right. I didn't know. Yes, but yes, it is 9,700. Again, remember cost of sale, you have to minus it, so write that within brackets. And then can we have the gross profit? Sales minus cost of sale, Afroz, that is correct, right? You get 5,300. There is no other income, but if there is, please add that. Okay, it's zero. What's the total expenses, anyone? 1,660, right? So Shafika, that is correct. Again, remember you are going to minus expenses, right? So can someone tell me net profit for the year? Right. So for Shafika, that is correct, right? You get 3,650 and Fatima also, yes. 3,640. That is your profit for the year. Actually, it's not 3,640. It is 3,640,000. So one mistake that even like everyone makes is that you get the answer here in thousands, and below the big sum, sometimes they ask you like a small part B question. If okay, so you calculate the, let's say, cost of sale, or let's say you calculate the inventory, right? And then they'll ask you, okay, what amount of the inventory. Okay, actually, I can ask you that. If I ask you a question after doing all of this work, right? Okay, I can't do this. I can ask it here. If there was a part B question under this, and the question said, what uh, amount would be, what is the amount of closing inventory in the statement of financial position? What would you say? Let's assume there's a small part B question under this one, and it says, what is the amount of closing finished good inventory shown in the statement of financial position? What would you say? What's the closing inventory amount? You mean answer scheme as in, let me check this with the proper scheme. Or you want like this sheet? Right, yes. So Shafika, that is correct, right? So it has to be, okay, 2 million also, but please write rupees 2 million. So sometimes what happens is that it's you see 2,000 and you just write 2,000, right? But remember again, it's in thousands. And also you have to write the currency. If you don't write the currency, it is wrong, because you can mean 2 million trees or 2 million coconuts or 2 million bananas. It could be 2 million anything. Please write rupees, and obviously take this in thousands as well. Okay. Also, one more thing is that that in the SOFP in a manufacturing company, under current asset, you would say inventory, and you have three types of inventory, right? So if you were asked to show an extract of the statement of financial position under current asset, remember there is closing raw material inventory, closing finished good inventory, and closing work in progress inventory, right? There are three types of inventory that you have to show under closing inventory. Okay. And that is all. So we have done all the required elements. And if you do all of this correctly, which is quite easy, honestly, I picked manufacturing accounts to teach you because I thought it was one of the easiest lessons. And also, very luckily for you, it has a big mark component as well, right? So if you get a question like this, it's a good area to score. I'll move the question down. Actually, it is much easier if I just move the question. Should have done that before. Right. We are done then. Is there any other question that you would like me to try? Like an MCQ or anything, you can always use a chat box, so you can send it to me and we can try. So I can send you this Excel sheet, right? So your question is here and the answer is here and the workings are here. Anything at all? Everyone's okay, 100% clear, no questions, nothing? All right, okay. So then just give me a second. I will share this on this chat box. I can share the presentation as well, right? Because difference between periodic cost and production cost. Hmm. Let me do some research because I'm not very. Okay, right. So a period cost is any cost a company incurs indirectly related to the production process. So period costs are the other expenses that come under the income statement. That is what it seems like here. Honestly, this is not a very technical term. I am not from the accounting department. But what it appears to be like is that periodic cost is your other operating expenses, so the expenses that we write down under the income statement, so your administrative, selling, finance expenses. So like we were discussing, your main business can be trading, right? Buying and selling, but you can't just buy and sell. Even if you're buying and selling in a virtual environment, you still need a warehouse and you need a postal address. So you need administrative expenses. You have to kind of do something else on the side. So even if you are buying and selling, you need to pay your accountant, you need to pay a manager. So they are indirectly regarding the production process, right? So it's not manufacturing, it's your other expenses, the supporting expenses that come under your income statement, I believe, like administration, selling, finance, and other. Is that okay? I am having some trouble, right? All right, nice. So on the chat, I have sent the Excel sheet and the PowerPoint as well. Anything else? All right. If there is nothing else, so we can end this session for today. There'll be other revision sessions. I'm sure you can keep up with the Muslim Majlis social media pages. There's a lot of webinars that you might find helpful. If you have any specific requests, like a lesson that you find difficult, just there's a number, right? There's a contact number and a WhatsApp group. Just let us know. They'll try to find someone to help you out. And all right, so we will end here for today. If you have any doubts, again, you can contact us regarding this lesson or anything else. Someone will try to help you out. We will see you soon, inshallah. Okay. So then goodbye.